right, good afternoon and welcome to the May Crop Production and WASDE briefings. My name is Lance Hoding and I am the chair of the Agricultural Statistics Board here at NASS. I almost said acting. It's good to have that gone. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We're very pleased to have Alexis Taylor, USDA's Undersecretary for Trade and Foreign Agricultural Affairs, join us as Secretary Designate today. And I'm also pleased to welcome Dr. Seth Meyer, USDA's Chief Economist. All right, I'd also like to share, I know Seth, you know this, but we do have a number of members, visitors here today for the Agricultural Market Information System group, as we'll call it. So welcome to all. They got here very quickly today, right? Yep. All right. I'd also like to express our appreciation to a couple of NASS folks who made trips in here to help us with the report. We've got Noemi Ginden and Hunter Peoples back here. We really appreciate their efforts to come in and help support the work that we had to do here tonight. Before I turn things over to our presenters, I do have a few notes for our live streaming audience. The crop production WASDE reports are principal federal economic indicator reports. The Office of Management and Budget provides specific guidance on how these important reports are to be released. OMB statistical policy instructs policymaking officials to refrain from making public comment regarding the content of these reports for 30 minutes within the release, and therefore we will not be taking questions from the public during this briefing. Both NASS and World Board staff will be available for phone and email questions, and NASS will host a social media event at 1 o'clock Eastern time this afternoon. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy, always refer to the official published estimates. With that, I'm going to turn things over to Nick Streff. He is the acting chief of the NASS Crops Branch. He will be immediately followed by Dr. Mark Jekanowski, chair of the World Ag Outlook Board. So, Nick.
Hello. Today I will be presenting the most recent estimates on several commodities, including winter wheat, haystacks, almonds, citrus, and cotton. First, let's look at our data sources for some of these estimates today. For winter wheat and haystacks, we have our operator reported survey. We had a sample size of just over 8,300. That data collection ran from April 29th to May 7th. And that's where we talk to producers and we focus on the questions of expected wheat harvested acres and expected yield. And we also ask them to include questions about current haystacks. To support our winter wheat estimates, we also have our objective yield survey. So May marks the start of the NASS Winter Wheat Objective Yield Program. This is where NASS samples fields and conducts plant and head counts in the same fields each month throughout the growing season. As the crop matures, wheat heads are clipped and sent to the NASS Objective Yield Lab for analysis. For May, the objective yield samples were set up in Kansas, Oklahoma, and Texas with a sample size of 257. That data collection ranged from April 24th to May 1st. And then for June, NASS will double the samples in those respective states and also add additional states. By the end of the season, the objective yield sample for wheat will grow to over 1,100 samples across 10 states. Moving on to citrus. For citrus this month, we have updates from Florida. So this includes our processor survey with a sample size of 5. Contacted those processors from April 16th to May 6th. And then we also have our row count measurement survey, which shows us the percent harvested for Florida. And those counts happen from April 29th to April 30th. And to go along with that, we have the utilization data from the Florida Citrus Administrative Committee. And that data shows us the quantity of fruit packed or processed. If we look here to see the distribution of those agricultural yield samples across the country, that's how the 8,300 are distributed for ag yield for NASS. Now, before we get into the wheat, let's talk about where the condition is currently. So this slide shows us the winter wheat condition from our crop progress weekly condition survey. Each line represents the percent of the wheat crop rated good or excellent. So the red line represents 2024. And for 2024, as of April 28th, 49% of the crop for the US was in good to excellent condition. That's much improved from last year at this time. And last year at this time, it was 28% in that good to excellent rating. So if we look at wheat development, also from our crop progress and condition survey, 43% of the wheat was headed as of May 5th. That's ahead of 34% last year and ahead of 32% for the average. So running a little ahead of schedule. And our final data point we'd like to show you today before we get to the wheat would be the drought monitor. So this slide, we're combining two data sources showing the impacts on wheat for drought. So first is the shading from the April 30th drought monitor. The legend on the bottom left of the screen notes the severity of drought or dryness in certain areas across the country. And the second data point to show would be the blue dots scattered throughout the map. That represents wheat harvested acres from the 2022 Census of Agriculture. Something to note here, Kansas has 31% of their crop in the good to excellent condition rating. While that is an improvement from last year, you can see that Kansas still has a fair portion of their state in some level of drought. Okay, on to the wheat numbers. So our planted acres for winter wheat are at 34.1 million acres. That's unchanged from our March report. Harvested acres are at 25.2 million acres, which is up from last year by 515,000 acres. This is the first forecast for harvested acres, yield, and production. Yield is set at 50.7 bushels per acre, up 0.1 bushel from last year. And production is forecast at 1.28 billion bushels, which is up 2.4% from last year. If we look at those harvested and planted numbers over time, you can see that 34.1 million acres and how it compares to our current harvested estimate of 25.2. If you look at our harvest to planted ratio, currently it's sitting at 73.8%. That is the 8th lowest on record for wheat. So while it is above last year, it is still one of the lower ones on record. And to note, 2023, just last year, was the second lowest HTP on record, and 2022 is the 4th lowest on record. If we look at harvested acres by state, first, just a note on how to read this slide. The top number on each state represents the harvested acres. The second number represents the percent change from last year. The states shaded in blue have increased over the last year, and the states shaded in red have decreased. The darker the color, the larger the percentage change. And looking at these winter wheat harvested acres, we're looking at record lows in Michigan and Virginia. That's notated by the ampersand next to their numbers. And you can see on kind of more of the central and eastern part of the US, we have decreases. And then through the central and west, we have a mix of increases and decreases in terms of harvested acres. Looking at the national yield over time, going back to 1995 with our trend line yield, you can see how the 50.7 bushels per acres compares. And then if we look at winter wheat yield by state, it's a mix of increases and decreases across the country. We're looking at record highs in Pennsylvania and Tennessee, notated by the pound symbol. And just some of the bigger changes from year over year in terms of total bushels. Oklahoma's up 9 bushels from last year, Washington up 11, Oregon up 12. And one of the larger decreases on a bushels per acre basis would be Arkansas, down 7 from last year. And if we look at our production over time, here's how that 1.28 billion bushels compares going back to 2005. If realized, this would be the first time in recent history, at least on this table, that we would have consecutive year over year increases. Looking at winter wheat by class, here's our hard red winter wheat at 705 million bushels. That's up 17.4% from last year. Soft red at 344 million bushels is down 23.5% from last year. But if you look in the bottom right corner of the slide, that notes the most recent history for soft red winter, and it's comparing back to last year, which was the 16th highest production on record there. Moving on to white wheat at 229 million bushels is up 15.7% from last year. Looking at trade expectations, here's how the NAS estimate fares in relation to the industry expectations. So a quick note on this slide, each blue dot represents an individual industry analyst estimate, and the red dot represents the NAS forecast. You can see NAS is within the range of the trade guesses, with several trade guesses above the NAS range at this point in time. All right. That concludes our wheat talk. Let's move on to hay stocks. NAS does a hay stocks estimate December 1st and May 1st each year. The May 1st hay stocks are sitting at 21 million tons. That is 46.6% above last year. That is the largest year-over-year increase going back to 1990. If we look at how it's divided up by state, there is a lot of blue on this map and a lot of large increases. We're looking at record highs in Montana, Oklahoma, and Utah. And then as you move east is when you start to see some states in the decline in terms of year-over-year hay stocks. Looking at the non-citrus fruit and nuts, almond production is estimated at 3 billion pounds, which is up 21% from last year and the second highest production on record. And moving down to peaches, now this is a California estimate at this time, at 510,000 tons. That's up 30,000 tons from last year. Looking at citrus, now this represents only Florida changes for this cycle of crop production. So all oranges are forecast at 2.7 million tons, which is down 1.6% from the previous estimate, so from last month. So for Florida, that would mean the non-Valencia oranges were unchanged for Florida. However, the Valencia production was forecast down 1 million boxes from last month. So that makes up the change there. Our grapefruit production is 345,000 tons. That's due to a decrease in Florida of 200,000 boxes from last month. Looking at lemons, there was no change to that estimate from the previous month, as those estimates were carried forward, and tangerines were also unchanged at 904,000 tons. Our final crop we're going to cover today would be cotton. Now, this is for the 2023 cotton production year, so last year's acres that were planted. Just to note, we did have some updates with that as we get our final ginnings data in and final administrative data. So planted acres remained unchanged at 10.2 million acres. Harvested acres were revised to 6.4 million acres. That's a decrease of 625,000 acres from the previous estimate. Yield increased to 899 pounds per acre, and production at 12.1 million bales is down 3% from the previous estimate. At that 12.1 million bales would be the lowest production for all cotton since 1986. And then some upcoming reports for NAS through the rest of May and June. We have farm labor on May 22nd, May 24th, cattle on feed, May 31st, egg prices, June 3rd, our agricultural industrial reports, June 12th, we'll be back here for crop production, June 27th, hogs and pigs, and June 28th, acreage, grain stocks, and rice stocks. We invite folks to join Lance Honing later today on X for a stat chat to cover this crop production report. That's at 1 p.m. Eastern. And NASA also has another stat chat coming up where NASA will be releasing the 2022 Census of Agriculture Congressional District Profiles. They'll be released next Wednesday, May 15th, and NASA will be hosting a stat chat with Brian Combs on May 16th to cover that topic. With that, that is all I have for you today. All reports can be found at nas.usda.gov, and happy Mother's Day.
All right. Good afternoon. So I will now walk you through the WASDE report for this month. I've got a lot of material here to go over. And as I think you know, May, it's a big month for us, the World Board. This is our first new crop official estimates for the new crop year. So happy Mother's Day and Happy New Year as well. So I'm going to go through, I'm going to, focus mainly on the new crop, but there's certain areas where, of course, we have to focus on the old crop as well. We'll talk a little bit about EU developments in EU, North Africa, Brazil. We'll get to those along the way. Some kind of interesting things to discuss there. Let's jump right in with global wheat production, focusing on the new forecast, 24-25, record wheat production forecast. And as you kind of go down the list, especially toward the top of the list here, see some Rebounding production mainly based on expectations for trend yields so far this year. We're going to talk a little bit more about the European Union. There's a region where we're seeing a decrease in production, mainly driven by a lower area. Go into a little bit more detail about that. Russia as well, we're down a bit on a return to trend yields there. Ukraine down, that's an area reduction, new crop year. China and India, both up strongly. So the two largest global wheat producers, both expected to have a record wheat harvest in the new crop year. I'll also talk a little bit about Northwest Africa. Another year of drought concerns there. So let's go into some detail in Europe. Real quick, just a map of the main wheat production areas in Europe, grown throughout across most of the region. Similar to rapeseed. So, these two crops, we're going to talk about them simultaneously, both planted in the fall, similar conditions throughout the year. So wheat harvest about to begin soon. Rapeseed harvest comes a few weeks later. But essentially what we're looking at, so let's go all the way back to last fall in Europe. And key thing here is it was an extremely wet fall. So here you see percent of normal precipitation in October, more than double normal in some parts of the area, made planting difficult. And so that's what's that's what's driving our expectations for lower production this year. So it's wet in the fall, but it continued, precipitation continued pretty good actually through the winter and into the spring. So didn't dry out too much, actually was favorable throughout most of the growing season. And it was also very warm, historically warm. This advanced the development of the crop. The crop is anywhere from a week to almost a month ahead of schedule. It's more advanced the further east you go there, and the warmer it became. So much of this, a lot of this crop is ready to harvest, soon to be ready to harvest, way ahead of, well ahead of typical schedule. And conditions look good overall, given the good conditions in the spring, good moisture. If anything, we might be, France in particular, maybe edging on a little bit too wet. They could use some dryness over the next couple weeks to a month. But generally speaking, across most of the region, good moisture, good growing conditions. But the problem had been just that the crop couldn't get in because of that wet conditions in the fall. So EU wheat summary, basically production down a bit, but driven by lower area. Yields overall for the country as a whole up a bit, but slightly above trend, but up from last year. Production down because of the lower area. Same story with rapeseed. Production down overall, driven by lower area, but yields running about trend, or expected to be about trend. Moving to North Africa, here is a region that has suffered drought 5 years in a row, continues to face dry conditions this year as well. We're going to focus again on Morocco, Algeria, and Tunisia. And percent of normal precipitation last fall. So it started out dry, and then the dryness continued through most of the growing season. So as I mentioned, 5th year of drought conditions. This is Morocco. And generally, as is often the case in this part of the world, it's kind of a case of haves and have-nots in terms of individual parts of these countries, regions within this region. Some parts of Morocco, up near Spain, actually got very favorable rains, good conditions, but there's a very stark line where things dry out the further west you go. Tunisia, pretty good overall, but Algeria, again, very dry in the west, better conditions in the east. But overall, when you look at the region as a whole, compared to last year, production a little bit better in Algeria and Tunisia, but doesn't quite offset lower production in Morocco. So production down overall in this area year over year. Global balance sheet. Few things we can talk about here. Let's focus mainly on the new crop year. Smaller carry-in, that's mainly smaller carry-in in Russia and China. Feed use down, wheat feed use down, and we're just seeing more competitive feed grain, more lower corn prices, et cetera. Makes wheat a little bit less competitive in feed rations. Total use up, some growth in FSI use there. Trade, Russia continues to lead globally, but next year, Russia's export forecast we reduced to 52 million tons, down from 53.5, a little bit smaller crop. Ukraine down as well. Ukraine exports down about 3.5 million tons to 14 next year on a smaller crop. Global exports up on the other hand, so a lot of offsets here. Higher exports by Australia, US, Argentina, and Kazakhstan, among others. Ending stocks down, so down in most of the major exporting countries next year. US supply and demand, so incorporating the information we got this morning from NAS. We made a small adjustment back here, truing up some export data, saw some, recent little bit strength in exports, so accounted for that in the back year. Of course, that marketing year is almost done. So now looking at the new crop year, imports down 20 million bushels. Again, maybe not too much of a surprise there. Higher US production, lower US prices. Food use, small increase there just based on trends. Exports up. Again, maybe not too surprising given the higher production, but importantly, it's a pretty healthy increase, and that's off a 52-year low. So season average market price down next year. We're currently forecast at $6 per bushel. That's down $1.10 year over year, and lower corn prices are, partially to explaining that. Moving into rice, global rice production also a record in the new crop year, and a lot of countries here. We're not going to talk about all of them, but just a few to point out. Increases in many of the major producers, major exporters, higher production in Bangladesh, higher production up in China, production up strongly in India as well. And that would be record production in India. So continuation of that long-term trend of higher production there, and also higher production in Indonesia, a rebound in production really after coming off of the El Nino year this year. And overall, again, it all adds up to a pretty sizable increase in global production to a new record. Global rice balance sheet. Again, focusing on the out year, the new crop year. We talked about production hitting a new record. Total use also record high. In terms of trade, so global rice trade, global rice exports, we have India's exports up 2 million tons. Offset by lower exports from Vietnam, Thailand, and Pakistan. Most of the production increases this year are going to be in countries that also consume a lot of rice, so trade impacts are relatively small, given despite the increase in production. And we're also expecting a decrease in rice feed use in China. Again, not too surprising there, given competitive feed grains. US balance sheet. So a few changes to the back year, mainly based on trade, updating to new trade data. So we raised our imports 300,000 hundredweight. That's all medium short grain coming in. And exports, seeing a lot of continued strength in long grain exports, rough rice exports, all to the Western Hemisphere. So up 3 million tons this month. So then looking ahead to the new crop year, doing as we always do, I mean, basing our production off of prospective plantings and trend yields, whatnot. Nearly a 2 million hundredweight increase in rice production for the new crop year. Imports up again, continuing the trend towards seeing strong imports of long grain aromatics, especially from Asia. Domestic use up, given higher supplies. That would be a new record domestic use. Exports up as well, just more competitive, higher supplies, lower prices, more competitive in global markets for the US. Season average market price, we lowered the back year 80 cents per hundredweight. That's all a reduction in medium and short grain prices. And for the new crop year, down fairly substantially, $15.60 per hundredweight, and that's across all of the classes. Moving into corn. So a lot going on here. Going to focus a lot more on the back year this time, because the back year, the 23-24, that is the crop in Brazil that is now, just being harvested and where harvest is just beginning. So we're going to talk a little bit more about Brazil. You saw you can see there we reduced Brazil's production 2 million tons this month. That is mainly an area change. Also reduced Argentina's production. That is reflecting insect damage. It's been in the news, leafhopper concerns there, reducing production potential. FSU, Ukraine, India, those changes are just truing up based on official data on the back year. Looking ahead to the new crop year, world corn production down, led by a pretty substantial decrease in the US. Down also in Argentina, where we're expecting to see an area shift towards soybeans. Brazil corn production, we anticipate continued strong growth there. Again, so that's based on area growth in Brazil. Again, this is looking way ahead into next year at this time. We expect a rebound in Mexico, where, as you know, they've been suffering drought this year. Normal prospects in the European Union. Ukraine down, that is largely a reduction in area and also a return to normal yields there. And a rebound in production in South Africa, again, post El Nino. So let's talk a little bit about corn production in Brazil. again, and cotton as well. These are the two crops that are kind of in play right now in terms of about to be harvested, about to be hitting the market. So second crop corn in particular, we're focusing mainly on center west, the grown usually, primarily after soybeans, of course. And cotton, also mostly center west and also some in Bahia. But again, with both these crops, we're at stages of the season where we're soon to be approaching harvesting. So looking back over the growing season, again, focusing on Mato Grosso here, conditions have been not too bad. Rainfall a little bit below average, but certainly not considered dry relative to previous years, up a bit from last year. So overall, reasonably good precipitation, but it's also been pretty hot at times. That has raised some concerns during the growing season. Still, when you look at the VHI this year compared to last year, conditions look pretty good. And this year in particular, so that's your graph here on the left. Really pretty good conditions in the north, center, west, offsetting some little bit less favorable conditions toward the south, but pretty good overall. And just a quick reminder of the importance of the second crop corn in Brazil, and the growth in that crop, especially over the past 10 years, as they've adopted those shorter season varieties, allowing now, more than up to over 100 million tons of second crop corn production in Brazil annually. So summary real quick, in terms of our production forecast for this month, for Brazil, we're looking at area down a bit, and that's mainly reflecting lower prices at planting, but we're still assuming trend yields. And so overall production down about 2% from where we were last month. Global corn balance sheet. Back year, real quick, the only thing I'll note here on the back year is global corn trade. A little bit lower exports out of Argentina and Brazil, given their smaller crops, but partially offset by higher exports from the US and Ukraine. Raised Ukraine's corn exports again. Now we're at 26 million tons. That's up 1.5 million tons from 1.5 million tons from last month. New crop year, production down. Mentioned that on an earlier slide, led by lower production in the US, Argentina, and Ukraine. Feed use up a bit, up fairly strongly. That's higher feed use in the US, China, Brazil, and India. In terms of corn trade, we're expecting higher exports. Higher exports from the US, lower exports from Brazil, Ukraine, and India. Ukraine exports for next year were forecast at 24 million tons, so that's down 2 million year over year. But again, US up a bit. So speaking of the US, real quick on the back year, so the crop currently being marketed, raised our ethanol, corn use for ethanol forecast 50 million bushels, seeing some fairly strong exports and also good blending economics. Relatively cheap corn prices, relatively high gasoline prices, so blending economics are good for ethanol. So seeing some growth in the data there. Exports, also picking up a little bit of export business in the past few weeks reflected there. And slow start to Argentina and Brazil, giving some opportunities for the US on those old crop sales. Price is down 5 cents per bushel this month, again, on the old crop. That's just reflecting prices to date, updating based on prices to date. And now moving into the new crop year, 24-25. Again, acreage area out of prospective plantings, the March report. Adopted the trend yields reported during the AOF yields there. And with that, you can see, fairly strong reduction in production, but an increase in beginning stocks, leaving total supplies up a bit year over year. Exports up, forecast higher for the US, a little bit less, fewer exports from Ukraine in the fall, giving us a little bit more opportunity there. Season average market price next year anticipated to be down 25 cents a bushel lower than the current forecast for the current crop year. Let's move into soybeans. Again, we're going to talk a little bit about Brazil. Here we lowered our Brazil forecast 1 million tons in that back year. Now focusing on the new crop year, again, looking pretty far ahead, strong growth, continued strong growth in South America. When you add together Argentina, Brazil, and Paraguay, for next year, we're looking at 231 million tons compared to 215 million in the current 23-24 year. So pretty strong growth there, continued large increases in production out of South America. Now Brazil here, so regarding our current forecasts for the old crop, this is the crop where harvest is just winding down in Brazil. So kind of, the soybean crop by now should be all in the bin. And as you probably know, this harvest starts from the north of the country down to the south. And so really the only area of the country that remains where some harvest remains is the very southern part of the country, Rio Grande do Sul. And this state, had started out in really good condition, anticipating a good crop, big rebound from last year. It was a drought year, but they got favorable rains throughout the growing season. And then as harvest approached, then basically the floodgates open, and it's been tremendous flooding in Rio Grande do Sul. It really just over the past few weeks. So all this is very recent. And as you can see here, this map shows the main areas of the country where soybeans are produced. So over about a 1 week period, 100 to 200 millimeters of rain, that's 4 to 8 inches. That 4 to 8 inches of rain over about a 1 week period right here. Some areas got even much more than that, of course. But so the question is, what does that mean for production, ultimate harvest there in this state? Again, again to emphasize so this is total precipitation for the state, way outside, several standard deviations above normal, all coming within the past, most of it all coming within the past few weeks. So the question is, then what does that mean for our production forecast? Well, I think the good news is that most of the crop had already been harvested before these rains occurred. So this map gives an indication of the amount of soybeans estimated not to have been harvested prior to these rains. And as you can see, especially in the areas, if you look at the previous map, those areas where they got some of the biggest rains, there's not a whole lot left to be harvested. So, so we're fairly confident it hasn't been a complete, disaster. It's still a little bit early to know what damage will be, whether those soybeans will be harvested or what will happen. But based on all of this, this is why we reduced our production forecast for all of Brazil by a million metric tons. All right, so the global balance sheet, soybean balance sheet. The quick back year discussion, just a couple things to point out. Crush up a bit. We raised our crush forecast this month by almost 2 million tons. That's mainly higher crush in China and Brazil, and reduced trade by 600,000 tons. That's mainly lower exports out of Brazil. Now focusing on the new crop year, 24-25. Big increase in total supply, as you can see, stands out there. Large production increase, large carry-in, so substantial increase in total supply. Crush up as well. Higher supplies, it's going to be crushed, and also relatively lower supplies of rapeseed and sunseed oil. Rapeseed and sunseed. So another important thing to point out, even though ending stocks here are high, production is high for soybeans, production for rapeseed, sunflower seed is down. So total oil seed production not necessarily quite as burdensome as this chart might imply. Also anticipating a big increase in another big increase in China imports, raised that 4 million tons to 109 million. US soybean balance sheet, nothing to talk about on the back year. So new crop year, again, supply driven by prospective plantings and trend yields. Soybean crush expected to be up, reflecting again higher supplies and also more biofuel feedstock crushing there. Exports up, heavily weighted toward fall. When Brazil's exports are lower, Brazil's exports are down, giving us a window in the fall to export soybeans. But with our higher supplies, lower prices, we should pick up some of that business. U.S. global soybean export share forecast at 28%, which would be down. 5-year average is about 32% for the U.S. So losing some U.S. global soybean export share there as well. Prices down, those would be the lowest season average prices since 2021. And ending stocks and stocks to use ratio, the highest since about 2019-20 crop year. Global cotton production. Just back here, truing up a few things. India, that's arrivals data for April. Looking into the new crop year. And so in the new crop year, so for Brazil, even though Southern Hemisphere, this is the crop that is in the ground now, just about to be harvested. We are anticipating record production in Brazil based on a strong growth in area and good yields. I'll have a few charts here just to demonstrate that in a minute. Turkey up a bit, that's also an area increase. China down a little bit, but not in the main growing region. In Xinjiang, production expected to be relatively flat. So that's a decrease mainly in some of the more fringe areas of the country that also produce cotton, where it's just not as economical. India down a bit, lower prices, economics favoring some other higher value crops like pulses and whatnot. Just a quick couple charts here on Brazil. So strong growth in Brazil cotton area. So for this crop year, so for the crop that's about to be harvested, area is forecast at a 50-year high. anticipating trend yields. So that is what is, leading us to expect a record crop in Brazil. And what's the, one thing that, we have to say is partly behind this big expansion in the area is just the fact that strong demand from China. And you can see where it really started to, so this is Brazil cotton imports by China from the main sources. Brazil being the part of the graph here in green. You can see in 2018 where it really picked up. China started buying from Brazil, continues strong, and that's driving a lot of that area growth in Brazil. Global cotton balance sheet. Back here, just really truing up some historical data. Not a lot to report there, but as we look into the new crop year, again, strong production growth. So big growth in cotton supply. Consumption up 3.5 million bales, anticipating some restocking that we've been actually anticipating for several years, but eventually it has to come. Next year might be the year, and also just keying off of economic growth forecasts, expecting some strength there. And ending stocks with the higher production, more than offsetting higher consumption. Global cotton ending stocks up year over year. U.S. cotton balance sheet. Again, so the data we got this morning helps to true up the back year balance sheet. So that's all reflected here in terms of the small reduction in production and a little bit of increase in mill use there as well, tightening up ending stocks just by 100,000 bales on that old crop year. New crop year, again, like with every crop, looking at planting intentions. One thing to note this year with cotton, abandonment is often a big driver of production. We're expecting a little bit lower than average abandonment this year. Conditions, especially in the Southwest, better this year than at least they were last year, past few years. So maybe a little bit lower abandonment there, increasing harvested area. So with that, that's at least almost a 4 million bale increase in production this year, partially offset by tighter beginning stocks. With larger supplies, we expect to see some increase in mill use, some increase in exports, but also some growth in ending stocks as well. So big supplies, relatively low prices, and export competition from Brazil. Season average market price next year forecasted 74 cents per pound. That would be down 2 cents year over year. All right, let's move into sugar. Changing gears here quite a bit. I'm going to start with the sugar situation in Mexico. Which, as you know, for the past several months, the situation in Mexico is what drives the situation in the U.S. And one thing that is noteworthy here, again, up to this point, we've always been focusing on the back year, and I'm going to continue to, focus a little bit on the back year these next few minutes. We actually raised Mexico's production a bit this month, so this is it's a small amount, but it's a noteworthy change from the past several months where we've been lowering that crop because of drought conditions, very unfavorable harvest going on there. But we are getting some reports of some improvement in cane yield and recovery. So that is reflected there in that higher production. Higher production also raised Mexico's exports. That does not go to the U.S., so all of that is going to other countries at this point. So that's the back year. Now let's focus on the new crop year, 24-25. Expecting a rebound in production in Mexico, but still even at this level, 5.2 million metric tons, that's still not a great rebound. That production is still fairly low historically, keeping supplies fairly tight. Mexico exports of over a million metric tons that would all go to the US. Mexico is anticipated to continue to need to import sugar to supply their own domestic needs. And we're anticipating some growth in domestic use just based on population growth. So that's Mexico. So now let's move into the US sugar balance sheet. So on the old crop, so again, this is the crop that we're still marketing right now. Reduced our beet sugar forecast a little bit there, as you can see, mainly reflecting the warm winter in the upper Midwest, a lower recovery. Came down as well. That's based on data from the Florida processors. TRQ imports up a bit, mainly reflecting some reductions in shortfall from the Philippines. So some sugar coming in there. Total supplies down a bit. Domestic deliveries down as well. That is just truing up to SMD data based on pace. Leaving ending stocks virtually unchanged, but just up 37,000 short tons. So now let's talk about the new crop year. And again, here we're looking at prospective plantings, but we're also looking at what we've seen as really favorable, almost historically quick plantings, early plantings ahead of schedule. And typically the earlier you can get that crop in, especially in the northern Red River Valley, the better your yield expectations are. So that is driving an increase in a production increase for beets. And also we're expecting higher production of cane as well. Imports down, so TRQ imports down. We're not at this point, no specialty sugar TRQ has been announced, so we're not anticipating, not accounting for anything there. High tier imports. So we're starting out again 216,000 short tons. Just based on recent pace, of course, from recent years, but at this point, not assuming any raw sugar high tier coming in. So ending stocks to use ratio of 11.7%. All right, let's move into livestock and dairy. Going to talk about both 2024 and 2025. Of course, in this case, we're looking at calendar years. So with the current calendar year, we're only not even halfway through. So there's still a lot to talk about there. And then we're looking way ahead into the next calendar year as well. So beef production for this month for the current year, 2024, up a bit, 140 million pounds there. That reflects entirely higher weights, higher cattle weights, and that also reflects the fact that marketings have been slower. So slower marketings, keeping cattle on feed longer, weights are weights are increasing. So those will come onto market later as heavier cattle. Pork production, small change this month, down just a bit, 30 million pounds. A little bit of offset there. Higher slaughter volume offset by lower weights. Broilers down a bit this month, mainly just truing up to slower first quarter slaughter data there. And Turkey production adjusted lower this month as well. Lower prices. It's that the industry's been under some pressure for some time. Moving into next year, beef production anticipated to be down year over year. Tighter cattle inventories going to be tightening up those beef supplies. Pork production pork production up 340 million pounds. Expecting continued strength in pigs per litter, offsetting some lower farrowings. Broiler production, steady growth, good, strong demand, lower feed costs, tight meat supplies overall, continuing to favor higher production by the broiler sector. Turkey, a little bit of a rebound there, some flock recovery from after HPAI outbreaks, but still relatively weak demands, keeping a cap on those increases. Prices, steer prices lowered for 2024 this month, $1.50, seeing some weakness in even some, uncertainty in demand. We're entering grilling season. This should be a, season of fairly strong demand. Still waiting to see how that pans out. But for now, we're just seeing, seeing recent data showing some reduction in steer prices. Hog prices as well down this month. Strong dollar. Some of this same factors, grilling season uncertainty, but also strong dollar affecting some of the export demand there as well. Then moving into next year, 2025, steer prices expected to rebound strongly there as well, reflecting those tighter supplies. No big surprise there. On the other hand, hog prices down a bit, reflecting higher supplies. So basic economics at work there. Broilers and turkey for the current crop, current calendar year, both down this month a bit, just reflecting recent prices to date. For next year, 2025, we're expecting a little bit of softening in broiler prices just because of the strong increase in production, and anticipating some demand recovery in turkey, hoping to provide some price strength there. In terms of meat trade, 2024 current calendar year, mainly truing up to, of course, more recent trade data, but we have seen a little bit of weakness in pork exports. Again, as I mentioned, strong dollar, a lot of competition from other exporters, and a little bit less demand from Mexico and others as well. Moving into 2025, tighter U.S. supplies of beef expected to cut into U.S. beef exports to some degree, as you can see. Pork exports up on the other hand, higher production, demand recovery, and lower prices supporting higher U.S. pork exports. And same with broilers as well. Beef imports also next year expected to be relatively strong, reflecting tight U.S. Beef supplies. Let's wrap things up here with dairy. So milk production up this month for 2024 and anticipated to grow into 2025 as well. Both stronger milk per cow and cow numbers driving both of those increases. And then in terms of dairy product trade, for 2024, the main story here, and this is a similar story to last month, strong butter and cheese demand and prices, bringing in more imports of butter and cheese and undermining exports of butter and cheese. So On the other hand, for the dry products, relatively weaker demand for non-fat dry and whey. So some export possibilities there. Moving into 2025, import fat basis imports, so cheese and butter, high U.S. production should reduce the demand for imports to some degree, and relatively high international prices as well. Exports, on the other hand, focusing on skim solids, some strength there, relatively lower U.S. prices for dry products such as whey and non-fat dry. Speaking of prices, dairy product prices, cheese prices, we've been seeing a lot of strength just recently in the past few weeks, so that's reflected here. Good demand for cheese, driving prices higher for 2024, so we raised that price. Also continued strong demand for butter, so price strength there. As I noted, not quite as much demand strength for the dry products, non-fat dry and dry whey, seeing some price weaknesses there. Moving into 2025, relatively lower prices across the board, just reflecting higher supplies of milk production itself and all of the products. So real quick on the class prices. So for 2024, class 3 prices higher, that is reflecting those the strength in the cheese prices. For class 4, it's lower non-fat dry milk that more than offsets stronger butter prices, and the all milk price up 30 cents per hundredweight to $21.20. Next year, we anticipate that to be about 30 cents lower at $20.90. And that covers all of the high points from the WASDE this month. Hope that helped to give you some perspective of some of the thinking that went into the numbers this month, and where the numbers came from, how we got there, stories behind the tables. And with that, thank you all for attending. And for those online, thank you for attending as well. We will see you back here next month. And now I will close out and turn it over.